Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So already 9 main problems I have completed on depreciation till the last video. So in this video I have to start from 10th problem. But this 10th problem is exactly same as that of 6th problem. So I'm leaving the 10th problem. I'll start from 11th problem onwards. So already I have uploaded the theory video on depreciation, in which I have explained you about the meaning of the term depreciation, why depreciation will be provided, what are the reasons, what are the methods of providing depreciation, what are the journal entries to be passed at the time of purchase, at the time of charging the depreciation, at the time of disposal. All these things I have explained in the first video. Then 4 videos I have given on short questions and MCQs. So if you have watched those videos, then only you will be in a position to understand the present main problems. So if you join in between, you may not be able to understand. So I suggest you to first watch the theory video, short questions, then only you come to the long questions. Now, before starting the next problem, 11th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So always keep ready the printout of the problems. Without problems, you may not be able to understand it. Take a screenshot of the solutions of 11th and 12th problem. Then I'll discuss about the detail of those problems. Come on, see the 11th one. At 1st January 2019, the balance of the machinery account was 18,000 and the balance on the provision for depreciation on machinery account was 9,000. So we are given the balances in the machinery account and in the provision for debt account. Machinery account shows a balance of 18,000 and provision account shows a balance of 9,000 on 1st Jan 2019. Machinery is depreciated 20% per annum on straight line basis on the cost. The cost to the machine is 18,000. So on 18,000, 20% fixed depreciation will be charged every year, straight line. A full year debt is charged in the year of purchase but none in the year of sale. There's a policy in the business to charge full depreciation at the time of purchase. That means we will not see how many months it is used. Simply whenever a machine is purchased, full year depreciation will be provided in the year of purchase. And in the year of sale, no depreciation will be charged, even if it is used for 11 months. So no depreciation in the year of sale. On 30th June 2019, current year, a machine purchased on 30th September 2017 costing 4,200 was sold for 2,000. The payment was received by check. So in this problem, there is a disposal of a machine. A machine was there which was purchased in 2017, 30th September. And that machine is sold during the current year 2019. The cost of that machine was 4,200. Now it is sold for 2,000. Previous video I have explained you, whenever an asset is sold, 4 entries will be passed. The first entry will be regarding the transfer of the cost price of the machine to asset disposal account. The entry will be asset disposal debit, machinery credit. First entry. Second entry, transfer the provision for depreciation on that machine which is sold. So entry will be provision for debt debit and asset disposal credit. Second entry. Third entry, cash proceeds on sale. When the machine is sold, cash is received. So bank account debit, asset disposal credit. Last entry will be profit or loss. If there is a profit, asset disposal debit, income statement credit. If there is a loss, income statement debit, asset disposal credit. Always whenever you listen this lecture, whenever you watch the lecture, keep a notebook beside you. And whatever entries I am telling, if you go on writing those entries, definitely you can be able to remember, right? Now, first A bit. Calculate the total depreciation charged on the machine which was sold. Actually, the machine was purchased on September 30th, 2017. We have to calculate what is the accumulated depreciation on that machine which is sold. First question. So here I have shown the calculations. Calculation, total depreciation on machine that was sold. What is the cost of the machine on 30th September 2017? That is 4,200. Depreciation is provided on straight line method at 20%. So first year ends on 31st December 2017. We have purchased the machine on 30th September 2017. We close the accounts on 31st December 2017. Now in the year of purchase, we provide full depreciation. We will not see the months. We provide full depreciation. So 4,200 into 20 by 100, 20%. It comes to 840. 840 is the depreciation for the first year, ending 31st December 2017. Next year, 31st December 2018. Again same, for 3,000, it is reducing balance method or straight line method? It is a straight line method. Straight line method, so we should not take like this 3,360. I have written here, it is not 3,360, it is 4,200. 4,200 into 20%, 840, because straight line method. In straight line method, the amount of depreciation will remain same on cost. So 4,200 into 20 by 100, 840. Here also 4,200 into 20 by 100, 840. Now the value of the machine is 2,520. Now it is asking you, what is the total depreciation on the machine which is sold? No depreciation will be provided in the year of sale. The year of sale is 2019. So we will not provide any depreciation for 2019. Only 2 years, 17 and 18. So the machine was sold on 30th June 2019. No depreciation be charged in the year of sale given in the problem. Total depreciation charged on the machine sold is 840 plus 840, 1680. First question completed. What is the total depreciation on that machine which was sold? That's all. Now second question. Prepare the provision for depreciation account for the year ended 31st December 2019. Balance the account on 31st December and bring down the balance on 1st Jan 2020. Simply, we are required to make the provision for depreciation account. And last question, prepare the asset disposal account. So two account we have to make. Provision for depreciation account and asset disposal account. Now, first of all, opening balance. Beginning of the year, 1st January, the opening balance of provision is 9,000. It is given in the first line. So balance brought down 9,000, 1st Jan 2019. 1st January. Now 30th June, when it was sold, the machine was sold on 30th June 2019. On 30th June 2019, one of the machine was sold. And when machine is sold, 4 entries we will pass. The first entry, transfer the original cost of the asset to asset disposal account. The entry will be asset disposal account debit, machinery account credit. So asset disposal debit. So debit side I am writing here machinery account. What is the cost of that machine? 4,200 was the cost. When it was sold? 2019, June 30th. On this date, the machine was sold. The first entry completed. Transfer of original cost of asset to asset disposal. Second entry, transfer the total depreciation on that machine which was sold to asset disposal account. The total depreciation is 1680. This 1680 will be transferred to asset disposal. The entry will be provision for debt account debit, asset disposal credit. The provision for debt should be debited. So here I am writing asset disposal. How much is the total depreciation? 1680. Date is 2019 June 30th. That's all. The provision is debited. Asset disposal is credited. Provision for debt 1680. 2019 June 30. That's it. Second entry we have posted. Second entry we have posted. Provision for debt. The third entry will be cash received on sale. So how much cash check is received? It was sold for $2,000. It was sold for $2,000 given in the problem. The bank account debit 2,000, asset disposal credit. So asset disposal credit side, cash book. That is bank. Even if you write bank, that will be enough. At what price it was sold? 2,000. 3 entries completed. Last and final entry is profit or loss. If debit side is more, there is a loss. If credit side is more, there is a profit. See, debit side 4,200, credit side 3,680. 3,680. So the balance is a loss because debit side is more. So here I am taking 4,200. Here also I am taking 4,200. Now here, income statement, loss, balancing figure. So out of 4,200 minus 3,680. See here, 4,200 minus 3,680. So 520 rupees is the $520 is the loss. $520 is the loss on sale of machine. That's it. Asset disposal completed. Now we have to provide the depreciation at the end of the year for the remaining machine. All the machines are not sold. Only one of the machine was sold. Other machines are still remaining now. Now we have to provide depreciation on other machines at the end of the year. That is 31st December 2019. December 31st. Income statement. Income statement. How much depreciation we have to provide? What is the original cost at the beginning of the month? 18,000. 1st January 18,000 was there. But 18,000, one of the machine was sold. What was the cost of that machine? 4,200. Deduct 4,200. So it will be 13,800. 13,800. And the rate of depreciation is 20%. So into 20%. So 13,800 into 20%. 13,800 into 20%. 2,760. This is the depreciation on the remaining machines. Remaining machines. 2,760. Now we take the balance. $9,000 plus 2,000, 9, 10, 11. 11,760 is the total. 11,760. From 11,760 we deduct balance carried down, balancing figure. Balance brought down. Here 2020 January 1st, next year. Here same, December 31st. Now how much is the balance we have to see? 11,760 minus 1,680. 10,080. $10,080. That's it. The 2 bits completed. First bit it is asking you what is the depreciation on the machine sold. Second one it is asking you to make the 2 accounts. I have prepared the 2 accounts. Now third question it is asking you evaluate the effect on the business financial statements of a change in the depreciation method for machinery to reducing balance method. It's a theoretical part. It is asking you what is the effect of change in the method of depreciation on the financial statements. Presently, the business is following SLM, straight line method. Now there is a proposal to change the method from SLM to RBM, reducing balance method. If the business changes, then what will be the effect on the financial statements? Now listen carefully. In straight line method, same depreciation will be applied every year. But in reducing balance method, the depreciation will decrease every year. Every year it goes on decreasing. When depreciation is decreasing, the profitability will increase. The effect on the financial statements is when we change the method of depreciation from SLM to RBM, the amount of depreciation will decrease. When amount of depreciation decreases, the profitability will increase. That is the first effect. Second effect is when the depreciation is lower, then the value, the carrying value of non-current asset will be more. The carrying value of non-current asset will be more in the financial position. So two effects we have. So if we change the method from straight line method to diminishing balance method, the profitability will increase because depreciation decreases. Second effect, when we charge lower depreciation, the carrying value of the asset will be more in the statement of financial position. So always I suggest to you, whenever I give the lecture, record it, note it down immediately. Even if you write it in rough notes, it will be okay, provided you must write it. Otherwise you'll forget it. So here I have given changing the depreciation method to reducing balance method will reduce the charge of debt, which will result in a higher profit. Just now I told you the profitability will increase. This change, the change will result in the carrying value of the machinery being higher and therefore the net asset value also being higher. So overall the change will be beneficial, but it must adhere to the consistency concept. See here, if we change the method from SLM to RBM, it is beneficial because profitability is increasing, the carrying value of a non-current asset will also increasing, but the problem is we are not following consistency concept. According to consistency concept, until and unless there is a genuine reason for changing, the method of depreciation should not be changed. Once it is followed SLM, the same SLM should be continued. Provided if there is a genuine reason, then only it must be changed. Otherwise, normally, the method of depreciation should not be changed according to consistency concept. That's it. This is the end of problem number 11. Now I am reading out 12th problem. On 31st March 2019, Ahab sold the machinery for $16,000. 31st March 2019, Ahab is the sole trader, sold the machine for $16,000. The machinery had been purchased on 1st November 2016 for $24,000. It was purchased in 2016 and is sold in 2019. He depreciates machinery at 20% per annum using the reducing balance method, RBM. A full year debt is charged in the year of purchase but none in the year of disposal. Specifically given the policy of the business, full depreciation will be charged in the year of purchase. When the year of purchase? 2016. 2016 was the year of purchase, full debt. And year of sale 2019, no debt in 2019. Then Ahab's financial year ends on 31st March. Every year accounts are closed on 31st March. Prepare the disposal account. Only one account it is asking you, asset disposal account. Already I told you, whenever an asset is sold, 4 entries are passed and you have to remember those 4 entries. You have to remember. By doing this type of problems 2, 3 times, 4 times, definitely you will get the command. Definitely. Provided you must have the patience, concentration, seriousness in learning, then only it will be beneficial. Now, asset disposal. When the machine was sold on 31st March 2019, but before that we calculate what is the total depreciation provided. How much is the depreciation provided on that machine which was sold? When it was purchased? 1st November 2016. So see here. The cost of the machine on 1st November 2016, 24,000. That was the cost. Accounts are closed on 31st March every year. So up to 31st March 2017, because 1st November 2016, so immediately coming March is 31st March 2017. Now we calculate 24,000 into 20 by 100, 4,800 is the debt for first year ending 31st March 2017. Now deduct 4,800, 19,200. Now second year ends on 31st March 2018. Again 1 year completed. We are following a reducing balance method. So 19,200 into 20 by 100, 3,840 is the debt for the second year. Deduct 15,360. Now we are not providing debt on 31st March 2019 because specifically given in the problem, no depreciation should be charged in the year of sale. So only two depreciation. First year depreciation 4,800, second year depreciation 3,840. Now total accumulated depreciation 4,800 plus 3,840, 8,640. This is the total depreciation on that machine which is sold. Finished. Now we recall what are the four entries to be passed when an asset is sold. First entry, asset disposal debit, machinery credit. Again I repeat, asset disposal debit, machinery credit. So debit side, machinery. What was the cost of that machinery which was sold? $24,000. This is the cost. The machine was sold on 2019 March 31st. 2019 March 31st it was sold. First entry completed. The second entry is transfer the provision for depreciation to asset disposal. Entry will be provision for debit, asset disposal credit. So asset disposal credit side, provision for debt. How much is the total depreciation? Just now we have calculated 8,640. 8,640, 2019 March 31st. The third entry is regarding the cash proceeds. How much cash is received on the disposal of the machine? It is given in the problem. It was sold for, Ahab sold machinery for $16,000. It was sold for $16,000. So cash received 16,000. Bank account debit 16,000. Asset disposal credit 16,000. So asset disposal credit side, cash book. Or we can simply write down bank 16,000. That's all. The last and final entry is regarding the profit or loss on sale. Debit side we are having 24,000. Credit side 24,640. 8, 9, 10. 16,000 plus 8,640 is 24,640 is the total on the credit side. That means which side is more? Credit side is more. So here 24,640. Here also 24,640. If credit side is more, there is a profit, I already told. Write it down immediately on the notebook. If the credit side is more, there is a profit, 640. Now, here I am taking 640 income statement. Balancing figure. It is not given in the problem, we have calculated. This is the profit on sale. That's all. So this is the end of problem number 10. Inshallah, we'll continue the next problem in the next video.